Hello, everybody, and welcome to the Monday Market Update. I'm Daniel Ackerman. I'm a realtor in New York City with the Queens home team of Keller Williams, serving Queens, and I'm also the Brooklyn and Manhattan specialist on the team. So we serve Brooklyn, Queens, and Manhattan. And this is the Monday Market Update where we go over mortgage rates, interest rates, and all of the interesting real estate headlines for the past week. So let's jump in with the mortgage updates. We get our mortgage updates from themortgagereports.com. We're not affiliated with that website. I just happen to find it to be a very, very useful website, and they publish the latest interest rates every single day, Monday through Friday, and it's a great resource of information for buyers and for sellers as well. So the news with the mortgage rates today is that the conventional 30-year fixed last week was hovering around 3.19 for the 30-year fixed, and today, Monday, March 21st, is now up to 3.31. So it ticked up 0.2 of a percentage point. And, that's not insignificant. But the news that they're also saying is that judging from early market movements, mortgage rates might fall a little bit today or hold steady. That, of course, can change depending on what investors in the stock market do. And it's important to remember this. We're probably going to do a podcast on the podcast channel about this, sort of the connection between macroeconomics and what's happening in the market, and then how that impacts mortgage rates and interest rates. But it is important to remember that they are interrelated. So, if bonds are doing one thing, or if the stock market is doing something, that's going to have an effect up or down potentially on mortgage interest rates. So just keep that in mind. So the 30-year fixed is at 3.3. The 15-year fixed is at 2.7. So if you think you can handle a higher monthly payment, the fixed 15-year might be a good idea. And if the absolute lowest interest is what's important to you and you're not buying your forever home, you might want to look at a 5-year adjustable rate mortgage. That right now is at 2.38. Very, very low interest. Of course, that's not the right product for everybody, but if you're going to be in a place for less than 5 years, then that might be a really, really great way to go. There are also 7-year and 10-year adjustable rate mortgages that typically have pretty low interest as well. So those might be good options to look at. And as far as the rate lock recommendation, Mortgage Reports has been pretty consistent with this lately, which is that if you are closing anywhere from 7 to 60 days from now, go ahead and lock your rates. They're very low. They are going up and down a little bit here and there, but locking your rate is the best way to lock in and protect against any potential increase. It may not be as low as it was yesterday, but that's okay. What you want to avoid is it going up. So they are recommending that you lock in your rate if you are closing anytime within the next 60 days. Okay, that's mortgage rates and interest rates. Now let's go to some of the headlines. And I'm just scrolling through my news feed here. Here's one. This is from brickunderground.com. There'll be a link in the description below. But the Biden administration is considering changes to the federal estate tax. And this would raise more money from very wealthy people in the United States, of which, of course, there's quite a few in New York. Historically redlined neighborhoods. And if you don't know what redlining is, it's a practice where certain people were basically prevented from moving into certain neighborhoods. It was discriminatory practice which the real estate industry has struggled for many, many years to counteract. But historically redlined neighborhoods, including parts of New York City, are at an increased risk of flooding, according to Bloomberg News. Nearly half of New York City's workers won't return to offices until September. And my fiance, perfect example, she works for a hedge fund here in the city, and she will not be returning to the office until September. And even then, it won't be necessarily full-time. So about half of New York City workers are experiencing that same situation. Fully furnished move-in ready apartments are the hottest new amenity, according to the New York Times. So a lot of people are looking for fully furnished apartments. About 80% of New York's adult population will be eligible for the COVID vaccine midweek when appointments open up to public-facing workers. So this is fantastic news. Will help the real estate market get back to more of a normal environment. But 80% of New York's adult population should be eligible for the vaccine by midweek this week. Transport, housing, resiliency, broadband, and green projects are among New York's pressing infrastructure news, according to the Gotham Gazette. I would tend to agree with all that. All right, let's look at a couple of other headlines. Here's an interesting one. Manhattan townhouses have increased levels of demand. They're up to about 2015 levels. Now, 2015, 2016 was the peak, the absolute peak of the New York City real estate market. And since then, things tapered off. And then we had the dip, of course, from COVID. But townhouses are now seeing a lot more action. And the explanation that they're giving is basically that, people are looking for more space. They now are no longer looking to get into that condo for the same dollar, for the same money that they can spend on, a multi-million-dollar condo. If they can do that, then they might as well jump into a townhouse where they have a little bit more space, more rooms. Maybe they're working from home. There's an outdoor area, et cetera, et cetera. So a lot of this being driven by COVID concerns. So we'll see how long it lasts. Once this pandemic is under control and starts to taper off, maybe that will change. Maybe it'll stick. We don't know. So that was the townhouses. What else we got here? New York City laws against short-term stays also apply to 1- and 2-family homes, say the courts. So what this is all about is Airbnb, basically, right? So if you're not aware, there were some lawsuits that went through New York City a few years back when Airbnb became a popular thing. Basically started by the hotel industry because they felt that people renting out their apartments on Airbnb was undercutting their business and it was a violation of New York City law. Well, it turns out that the courts agreed, and so they prevented people from renting out their entire apartments on Airbnb for short-term stays because it basically violates the hoteling laws in the city. What they said was basically you could rent out a room on Airbnb in a place that you were living in, but you could not rent out a whole apartment that you were not living in for short-term stays, anything under 30 days. Okay. Now, some people thought that maybe they could still do it with a single-family home or a 2-family home where they rent out their house, or if they're in a 2-family, they live in one floor and they rent out, let's say, the upper floor. Well, the city has now clarified that, and the courts have ruled that no, that in fact is also a violation of the city laws, so you can't do that. So if you're doing that, just be aware that it's not in line with New York City laws, and you take a big, big risk. Okay, and I know that those fees that they charge people are really, really steep. So if you get caught, that's not fun. Here's an interesting one. Now, COVID has obviously had a huge impact on the city's revenues. The city's not collecting revenues from parking fees. It's not collecting revenues from a lot of property taxes are not getting paid. All kinds of things. The MTA, they're not getting any revenue from public transportation. So the city's revenues have been impacted deeply, and it's probably going to have an effect for several years. So it looks like the city's trying to find new ways of generating revenue. And one of the things that they've decided, or one of the things that are being floated, is this idea for 3 full-scale casinos that could get put on a fast track for development in New York City. So that's pretty new. There's also a plan for a new development from Two Trees that would include a sandy beach along the East River, part of a 6-acre public park in Williamsburg. So that could be nice. And that is about it. Now, here are a couple of the national headlines, and what's really interesting about looking at the national headlines is to see just how different they are from the New York City market. So here's one on Realtor from Realtor.com, how the U.S. housing market was rocked by COVID-19 and where we go from here. And it's talking all about how the market was just on fire in the last year. And I can attest to that because I just bought a home this past year, and it was crazy. There was bidding wars and everything. It was nuts. But I bought in Jersey, just across the way from Manhattan, And it's a completely different story in Manhattan and New York City. Now in New York City, what we were seeing is our single families and two families were selling, but all the co-ops and condos, they just are not selling. And it's a very, very challenging market. And there's a ton of inventory, which is a complete reversal from what the rest of the country is seeing. There are parts of the country that are seeing zero inventory, literally no houses available. There are parts of the country where the inventory is getting bought up in 2 days, 3 days, 2 days, less than a day. So it's a really, really different environment elsewhere in the country. And it's important to remember that real estate is that local. Even in New York City, you're seeing differences between different neighborhoods and different housing types. So when you look at these national headlines, just remember to take them with a grain of salt because they don't necessarily apply where you live, okay? Existing home sales fall as inventory remains a challenge for buyers. You look at Manhattan, it's the reverse, right? Home sales are going up in Manhattan because they were in the toilet all of last year. So, you know, really, really points out how hyper-local real estate can be. Well, guys, that's about it. Those are the interesting headlines in real estate for the last week, as well as the mortgage rates. Hope you've enjoyed the Monday Market Update. If you like this video, give it a thumbs up. And if you'd like to see more of this content, make sure to subscribe to the channel. And if you hit the bell, you'll get notifications of all the new content on the channel. Thanks very much for watching. Hope to see you again soon. Take care.